Dow drops 100 plus points, Trump's EU tariff plan shakes markets. Live analysis. The Dow Jones Industrial Average experienced a significant decline, closing down by over 100 points following a report indicating that President Trump is advocating for a minimum tariff of 15% on imports from the European Union. This news has stirred concerns in the market, leading to a downward trend in stock prices. On Friday, July 18, 2025, the S&P 500 and the Dow both finished the day in negative territory, reflecting a broader market reaction to tariff anxieties. The Dow, which comprises 30 major stocks, fell by 142.30 points, translating to a decrease of 0.32%, ultimately closing at 44,342.19. Meanwhile, the S&P 500 dipped slightly by 0.01%, ending at 6,296.79. In contrast, the tech-focused Nasdaq Composite managed a modest gain of 0.05%, closing at 20,895.66. But here's where it gets controversial. The upcoming earnings reports from the so-called Magnificent Seven tech companies, including Alphabet and Tesla, are set to kick off next week. These reports come at a time when the S&P 500 is nearing its all-time highs, buoyed by a strong corporate earnings season and ongoing excitement surrounding artificial intelligence. Analysts predict that these major tech firms will collectively achieve an impressive earnings growth of over 14% for the second quarter, while the remaining 493 companies in the S&P 500 are expected to see a much more modest growth of just 3.4%. In midday trading, several stocks made notable moves. Talen Energy saw its shares surge by more than 23% after announcing agreements to acquire 2 combined cycle gas-fired plants for $3.5 billion, which includes estimated tax benefits. This acquisition is expected to enhance Talen's portfolio significantly. Invesco shares jumped by 12% as the asset management firm sought shareholder approval to convert its popular Invesco QQQ Trust into an open-ended fund, a move that could increase fee revenue and reduce costs for investors. Regions Financial shares rose by 5% after the bank reported second quarter earnings that exceeded expectations, with adjusted earnings of 60 cents per share, surpassing the consensus estimate of 56 cents. And this is the part most people miss. The Financial Times reported that President Trump is pushing for tariffs on EU imports to be set between 15% and 20%, while maintaining a 25% tariff on the auto sector. This news led to a sharp decline in the Dow, which fell by over 200 points following the announcement. In the semiconductor sector, analysts from Mizuho suggested that the recent dip in Micron Technology's shares presents a buying opportunity, as the company is expected to benefit from a shift towards high-bandwidth memory chips. In other market news, ETFs focused on Chinese stocks have outperformed this week, and Wolfe Research's Chris Senyek indicated that industrials and technology sectors are likely to continue leading the market upward. As we look ahead, the housing market showed some signs of improvement, with housing starts and building permits coming in close to estimates for June. However, completions have seen a significant decline. What do you think? Is the push for higher tariffs a necessary step for the US economy, or could it lead to more harm than good? Share your thoughts in the comments below. Trump's tariffs, the EU's secret plan to crush American industries. A showdown is brewing that could shake the pillars of global trade. President Donald Trump's plans to impose steep 30% tariffs on the European Union as of August 1 threaten to unravel decades of delicate negotiations and disrupt what many consider the most significant commercial partnership on Earth. Why does this matter so much? Because the ripple effects could hit everyone from German auto workers to wine lovers in Rome and everyday consumers in the US. But here's where it gets even more contentious. Could this be the start of a new era of trade wars? Let's dive in. The European Union, with its formidable bloc of 27 nations and nearly 450 million residents, stands shoulder to shoulder with China and the US as a giant in global exports. When it comes to trade, Brussels insists it won't be bullied into any lopsided deals. Despite Trump's 11th-hour tariff announcement throwing carefully crafted US-EU negotiations into chaos, exasperated EU officials are still at the table, scrambling to find common ground. What's at stake? Over 20% of all goods exported from the EU end up in the US, making America a vital customer for European businesses. Maros Sefcovic, the EU's trade chief, warns that Trump's tariff threats could all but halt the exchange of goods between two of the world's most interconnected economies. And this is the part most people overlook: it's not just numbers on a spreadsheet. It's entire industries: German car builders, Irish drug makers, French and Italian wine producers, whose fate hangs in the balance. In 2024, pharmaceuticals, vehicles, industrial machinery, and aircraft made up the bulk of EU exports heading to the States. And if US tariffs take effect, the EU is poised to fire back. American bourbon, Boeing aircraft parts, home appliances, meats, and even soybeans may soon face the EU's own set of retaliatory tariffs. Suddenly, that calm transatlantic relationship looks a lot like open economic warfare. Which industries and countries are trembling most right now? Let's take a closer look. German automakers in the hot seat. Germany, Europe's powerhouse exporter and engine room for the EU economy, faces a particularly worrisome scenario. Cars and pharmaceuticals are two of its biggest US-bound exports, and both are in the crosshairs. Think Mercedes-Benz, BMW, Volkswagen, and Volvo, all brands with significant stakes in breaking down America's existing 25% tariff on imported vehicles. German Chancellor Friedrich Merz has gone so far as to warn that these new tariffs could strike at the very heart of Germany's export-driven industry. Trump, for his part, has long fumed about what he sees as unfair EU trade barriers, pointing to, among other things, the EU's 10% tariff on foreign cars, compared to the US average of 2.2% across all goods. The World Trade Organization reports the EU actually maintains a reasonable average tariff, 2.8%, not vastly different from America's. But here's the twist: US carmakers face an uphill climb in Europe regardless, thanks to European preferences for compact vehicles and narrower roads that don't favor the big American models. Ireland's pharmaceutical powerhouses brace for fallout. Tariff threats don't stop at cars, they also haunt the pharmaceutical sector. Famous European drug makers, including Denmark's Novo Nordisk, the company behind the blockbuster Ozempic, and France's Sanofi, now face the possible blowback from new US trade barriers. Even American pharma titans like Pfizer and Johnson have huge operations in Ireland, drawn by its attractive tax rates. Here lies another controversial angle: could such tariffs cause global drug shortages or drive up prescription prices? Some experts argue the disruption of international supply chains could have just that outcome. For Ireland, the stakes are especially high since medicines are its top export to the United States. Nearly 30% of Ireland's overseas goods sales head to American shores. In other words, it's got a lot to lose. While Irish and EU officials have considered accepting a 10% minimum tariff as a compromise, their wishes for guarantees that critical industries like pharmaceuticals will escape any further duties. Simon Keever, who leads the Irish Exporters Association, warns: is it 10%, is it 30%? The specifics may be a bargaining tool, but ignoring the risk would be reckless. France and Italy fear for their world-famous wines. Wines and spirits occupy a special, an emotional, place in this debate. French champagne, Italian Chianti, Irish whiskey, and Spanish cava are all icons in their own right. These products symbolize culture and tradition, making them lightning rods in trade talks. The EU has pushed to shield its producers here, and, interestingly, has even pushed back against plans to target American whiskey in retaliation, trying to protect a fragile trade peace in the drinks sector. Nonetheless, the chill is already being felt. Italy's wine and spirits exports to the US have slowed, and a full-on trade war could deepen the pain. Should cultural exports be used as bargaining chips, or are they too unique to be weaponized? It's a debate that splits both sides of the Atlantic. The EU's retaliatory arsenal, American icons at risk. So, what's on the EU's hit list if negotiations break down? European policymakers have quietly prepared not one, but two lists with over $100 billion worth of American goods, ranging from bourbon and jet engine parts to home appliances and agricultural products like meat and soybeans. What's more, the EU could aim these tariffs to hurt the home states of leading Republican lawmakers, leveraging pain to maximize their bargaining power. Still, many in Brussels insist they'd prefer a friendly solution with their American partners rather than all-out escalation. Here's a controversial counterpoint. While Trump rails against the EU's trade surplus in goods, it's often ignored that the US dominates when it comes to services with Europe. Think tech firms such as Google, Microsoft, and Apple. Some EU officials are now floating the idea of targeting these US tech companies in a future